Earnings per share reflects the level of earnings achieved for every share of stock. Because it focuses on the return earned by the common stockholder, it looks at earnings after preferred stock dividends have been paid. Preferred stock dividends are subtracted from net income because they're paid before common stock dividends are paid. Net income less preferred stock dividends is available to the common stockholders. This figure tells investors how much they've earned on each share of stock they own, but not necessarily how much the company will pass along in dividends. This figure is available in the daily stock price listing in newspapers and can be used to compare the financial performance of different companies. Earnings per share are calculated as follows. Earnings per share equals net income minus preferred stock dividends divided by number of shares of common stock outstanding. If you found this video helpful, feel free to give it the thumbs up. If you have any questions, please ask them in the comment section below. Also, subscribe to our channel for more videos. If you really want to be cool, like us on Facebook and follow us on Instagram and Twitter. Thank you so much for watching and have a great day.